This week in oil, we're going to talk about Cushing stocks still being really low, distillate stocks now below the 5-year range. Hey, I'm Aaron with the Oil Balance, coming to you with 30 years of experience in the oil markets, including 10 years on Wall Street. But let's get right into the data. So, things you need to know this week in oil. Again, we're going to focus on mainly Cushing and the distillate markets. But you can see, hopefully, right here, Cushing stocks are still low. They have yet to rebound. They haven't really drawn too much either, but they have yet to rebound so far this year. Now, these stocks are so low that spreads should be rallying, flat price should be rallying, but they're not. So we're going to get into that here in just a minute. You can also see distillate stocks, which includes, it's mostly diesel fuel. Distillate stocks are now below the 5-year range, not only total nationwide, but we're also looking at Pad 1B as well, which is again the delivery location for that NYMEX distillate futures. So here's the a chart of different NYMEX related inventories. So as I mentioned before, Cushing is the delivery location for the WTI contract. So if you go long futures, you're expected to take delivery. If you go short futures into expiration, you're expected to make delivery. Again, it's going to be pretty difficult to do so if there's nothing there to make delivery with. In Pad 1B on the distillate side, so again, just think of this as ULSD, the diesel fuel that trucks would use, but it's also home heating fuel for a lot of people on the Northeast. Again, these are super low. Pad 1B would be the mid-Atlantic states, so New York, Pennsylvania, New Jersey, that sort of thing. So huge population base on the East Coast, but stocks are getting dangerously low, and there's another storm coming for mid-February. Should bring some colder weathers and some snow as well. So those two are definitely a concern. But to sort of get back to Cushing really quick, you would think with inventories this low that spreads should be rallying quite a bit, and they're really not. So let's flip over to the March-April spread. So on here you can see back in late January, March, April. So again, March deliveries versus April deliveries. They're almost $1.50 premium. March was to April. And I think that made sense given the sort of inventory levels, but things have come off quite a bit. So if you were to subscribe to the oil balance, I could have been sending you these updates where you can see the turnaround schedules. And from there, you would know that there's actually a pretty decent turnaround coming up, a refinery maintenance. It's sort of the same way of saying something coming up here in March. And it's going to kind of peak out in late March, but it should be enough to support the some builds in Cushing. So that should be interesting. So that's what sort of the market's expecting. That's why the spreads have sold off back to more reasonable levels. So if you look at sort of the historical, it's unusual for that March, April to go off backwardated, meaning that the front month is more expensive than the second month. They usually contango. And $1.50 is certainly very unusual, unless weird things are happening, like let's say Russia invades Ukraine or something like that. This year, I think it's mostly trying to figure out what's going on with inventories, and again, the market anticipating those builds coming in later in the month. If you go to the Oil Balance website, there's a couple places where you can subscribe to this exact presentation I'm going through and see the whole thing. But I'm just kind of running through some things really quick right now so you can see what's going on. Gasoline inventories are actually doing pretty good. We've had a nice bit of builds here recently, just above year-ago levels at this point. Jet stocks, again, have been fairly decent. A little bit of a draw this week. It was pretty good demand coming back into the top of the 5-year range. Residual fuel remains low, as we discussed last week on last week's episode. Again, that's a big concern going forward. That's something we're keeping a close eye on. And then propane just kind of doing what it does this time of year. This is the time for drawdowns. April or May is when we make that corner. We turn the corner, start going back into seasonal builds again. But I wanted to show you one thing real quick, and that's this distillate demand. It's been going absolutely nuts for the past few weeks here. But you got to think about this. Demand is a number that they solve for, It's not, they're not on these weekly numbers, they're not actually out there trying to figure out how many barrels have left. What they're doing is they're looking at inventories, which is the data point on the weeklies that you have the most confidence in. And then they know what the supply was, so they know what imports were that comes through customs. The refining base tells them what was produced from the refineries. That's a fairly decent number, but can change, or would change on the monthly report. That's a little more detailed. And then the rest is fill in the gap, right? That's the demand. So the change in supply and the change in inventory and the change in supply give you that demand number. So these numbers are all basically calculated, and yeah, they're sort of a rough estimate. They should be pointing us in the right direction. The monthly numbers is where you actually get into the data, where you can say where they're actually tracking the barrels and saying, yeah, this is actually consumed. So why I go through that whole thing is to say last year you can see demand this time of year was on the bottom of the 5-year range. It was really low. This year it's really strong. What we think happened last year is you had a bunch of renewable diesel coming into the market at this time back here. And so people were choosing, especially in Pad 5 on the West Coast, they were choosing to run that diesel fuel out there instead of conventional petroleum diesel. So that would have so there's less disappearance, right? And less demand going away. Now we're hearing that there's some issues more from the financial side than anything on some of these renewable plants, and so inventories or they're not as producing as much, right? So if the same consumer out there in the West Coast has to drive their truck or whatever it is that consumes the diesel fuel, they kind of have to go for the petroleum based diesel fuels. That's all there is if these renewable plants are going through a bit of a tough time right now. So we may be getting sort of elevated numbers from here. I wouldn't be too surprised when the monthly numbers come out in about 2.5 months from now, if we don't get some more reasonable numbers. But at any rate, this is what we have to go on. And the other thing I like to look at is days of supply, which I do have in this presentation here. But again, that days of supply is predicated on the domestic demand. So if the domestic demand is too high, it's going to skew these days of supply too low, if that makes sense. So I still think it's worth keeping an eye on. At the end of the day, the most important data point in the weekly stats is that inventory number, and the inventory is low, right? So that's telling us there is something for concern, but I think maybe some of these details can get fleshed out a little bit in the monthly numbers. The other thing I wanted to point out real quick is distillate stocks in Pad 2. So diesel stocks in Pad 2 are actually on the upper end of the 5-year range, and that's a good sign. The reason I say that is we're about 4 to 6 weeks from planting season starting up, and this is fuel for the farmers to get out there in the fields. And yeah, there's a lot of trucking and stuff like that going on, but I think sort of as a nation, the main concern should probably be getting grain in the ground and other crops planted. So the good news is it looks like there's enough diesel fuel in the Midwest for the farmers when they want to start pulling that. The bad news is inventories are actually pretty low on both the coast and the in the Gulf Coast as well. So now we're right here at the very bottom of the 5-year range here in the Gulf Coast as well. So those are the two things I wanted to cover this week on This Week in Oil. Again, if you go to our website, theoilbalance.com, there'll be more information there if you want to see this whole chart pack. But that's all I have for today. So talk to you later. Bye.